Okay, traders, welcome to another video. And this is a video, I'll be discussing a few topics from my years of trading. And I want to go over some of the myths about trading and the myths about people who want to learn. Specifically today is about currency trading and why a lot of people, they believe that currency trading is the key to making a lot of money. For the majority of people, they will never be profitable trading Forex. And I'm going to break that down into a short video and talk about why. The first thing that you need to know is that in the currency world, most people who are trading currencies are trading the developed currency pairs. So they are looking at the major G10 currencies. The problem with that is that there is not enough volatility, and most of the so-called volume that is made up is coming from corporates hedging their own cash accounts. So what you'll see when you look at a common currency pair like cable, which is pound dollar, or for example euro dollar, or anything like this, what you're going to actually see is that a big portion of the volume that's going through the exchanges is big companies hedging their own cash accounts, their own profits. So take a big company like Apple or Microsoft, for example. They sell products globally, which means they'll be accepting payments in sterling, euro, dollar, but they also sell products in emerging economies. So like India, for example, the minute that they receive payment in the local currency there, the Indian rupee, they will want to trade it back for a more stable currency like the dollar or the euro. And the problem with the currencies in the West is there's, especially in the UK with the pound, you'll never see the big swings that you'll see in emerging markets because there's far too much money tied up in property, in pensions, in money markets, that it would be far too risky for the pound to sell off. So what you end up seeing is very little movement in the developed currency pairs. And because the values are so similar, you get markets that go sideways, and there's very little way that we can make money from that. What we need is big rallies and big sell-offs to monetize. So what we actually do is we look at more on the emerging market side, which is a much larger untapped market. There's very little in the way of retail volume, but it's very speculative. And people, they get it wrong. They get it completely wrong when they're trading currencies. We like to look at big macro themes, thematic themes, and then drill down into specific case studies to be able to monetize. So one of the big key themes over the last 2 years or so since we've had the bull run in commodities has been, is your economy a net importer or a net exporter for the things like crude oil, natural gas? And the big theme has been, if your economy does not have commodities, your currency is sold off as the commodity markets have gone through the roof, grains as well, then it's really affected those countries. And that's why Japan last year, one of the worst performing G10 currencies was the Japanese yen, because they have very little in the way of natural resources and commodities. So they're having to buy it in. And the problem then is they're having to then purchase it from other economies that can export it. And that's a real issue. And so when we look at things like current accounts for economies as a whole, we can look at what they're locking in imports for, whether it's on forwards or spot prices, and we can look at the premiums that they have to pay. And of course, there's some asset crossover between commodities and commodity currencies. So I would urge people who want to get into foreign exchange to not waste time on cable or euro dollar. There's very little way of finding edges there. And if people are looking at volume indicators and things like this, they will struggle because the volume that comes through on cable, as I mentioned, is primarily corporates hedging cash accounts. Remember that these big companies are not speculators in the market. Microsoft is not trying to speculate on where the euro is going. They're simply trying to put their profits into safer currencies, and that accounts for volume in the foreign exchange. The same with holidaymakers exchanging money. That all counts towards FX volume, but that will tell you nothing about where a currency is going. So to really get the big moves, you need to be more niche or boutique and understand and build these case studies from scratch. We particularly like the emerging nations. We even go as far as to look at places like Indonesia, Malaysia, where they're big exports of things like crude palm oil. It has a big sway on things like their GDP and their current accounts. And that can really help us to build these complex FX case studies, if you will. So I urge people who want to get into foreign exchange trading to not believe the hype that you see online. It can be done and you can make big sums of money, but understand that this is not a thing where you can come in and do 10 minutes, an hour trading a day. This is a full-time job, and there's a lot of hours that we have to put in here at our offices at work. And it's constantly doing research and what I call data harvesting, building these case studies from scratch. They're very complex. There's a lot of moving parts to them. So keep that in mind. And that's all. I want to sign off, and I'll be doing another video soon for currencies. But we've had big speculative plays. One of our big currency trades over the last 18 months has been the Turkish lira. We've been tracking their poor performance across the board. It wasn't that long ago that $1 bought 10, 11, 12 lira. Today it's just shy of 27, 28. So there's some amazing returns, and that's without using leverage. That's purely on the spot markets. I haven't even talked about the credit side of things when incorporating that into Forex trades and understanding the difference between the spot market and swaps and forwards, and understanding how money managers lock those in, the premiums that they have to pay, and how that affects and how we get these currency fluctuations. So there's so many emerging markets that you can trade and hedge them against the US dollar or even the euro, that people really should understand that to do Forex on a big scale and to make a lot of money, you need to be able to be set up to do it properly as well. So everything that you're seeing here, all these screens, is a very expensive setup, and that will come in another video and I will explain more. And perhaps I will do some of our live case studies and explain our trades and our investments, both long and short, in the currency markets. So that's it for today's video. It's a short video. It's just me rambling, getting everything off my chest that I've been wanting to say for quite a while. I get a lot of questions. We get emails constantly asking us about currency trading. How do you get into the currency trading market? So hopefully this opens your mind, broadens your mind a little bit, and you can go out there and attack it from a different angle, because as we know, the herd, they don't make money. So you need to be different. Okay, that's me signing out.